What's up everybody? So in this video I'll be going over a new edition of manual Outback, and there's three big things that come with this. As you can see at the top, we are on the 5-minute time frame. Outback is not limited to the 1-minute time frame for Forex pairs anymore. Now we have included the addition of the 5-minute time frame, which is super cool. Second of all, we have added an additional indicator, aka the CM stochastic multi-time frame indicator, and what this allows us to do is weed out consolidation and give us way more quality trades, which is super nice. Normally with Outback, the problem is that you could have price bob and weave off of the moving average, and you could get 3 to 4 entries, and it's basically a guessing game to see which one will actually break through. But with the CM stochastic, majority of the times what it'll do is it'll actually give you the signal. It'll be delayed. It'll wait until the trend is actually forming, and then you can get in without having to watch your trade go through consolidation, which is super cool. And then last but not least, we've added a rendition of the older version of Outback. And what I mean by that is, if people have watched the previous video, manual Outback, you'll know that I add an RSI oscillator to the charts, and then I add a whole suite inside of the RSI oscillator. But now with the addition of Sven, which is an awesome staff member in the TTF community, he has actually merged both indicators into one, and it makes it visually easy to read the indicator, and you don't have to really squint to see the lines crossing. And so those are the three main things coming with this new edition of Outback. What I'll do now is I'm going to go over setting this all up on the chart and give you all the settings. Then I'll go over how to look for buys and sells, the criteria that you do, and how I go about my checklist of looking at the indicators. Then I'll give you buy and sell examples, and then finally I'll show you my guinea pig project, aka my guinea pig experiment with Papa J, aka my dad. Yes, I got my dad involved with this strategy. He loves the 5-minute, he loves scalping, so he basically took what I gave him with all the rules and the criteria and kind of spun his Papa J style on it. And I'm going to be showing y'all a screenshot of the last 2 weeks. He's been trading this on London with basically majority of the major pairs. And I'll show you everything that he's done. I'll show you the TV screenshots that he's done, trying to basically talk through his mentality of why he did the things that he's done. And yeah, we're going to go about it there. So without further ado, let's get started. So the third thing that I mentioned with the new edition is the basically rework of the manual oscillators that I used on the charts. Normally what you would see is I would add an RSI oscillator on there, like I said, and then merge the whole suite into there. But you don't have to do that anymore. So if you search Outback in TradingView, this is a free indicator, Outback RSI and Hull by Mr. Nikoru, aka Sven. Thank you, Sven. This indicator will pop up down here. And as you can see, you have your normal purple RSI line, then the white line is your SMA for your RSI, and then this yellow line is your Hull. So what you'll actually do here is we're going to be changing the settings. So your RSI length will be 233. We're going to keep our RSI trigger level at 50. Then we'll move to moving average settings, and we'll change 200 to 89. And then we're going to change our whole suite to 144, and then you're good to go. And I'm going to go one step further. You actually don't even need to have these lines on the chart, because as you can see here, as I expand this, whenever our RSI is above our SMA and our whole suite, that is a buy criteria for this oscillator. And as you can see, whenever this happens, our oscillator highlights green, vice versa. When our RSI line goes below our whole suite and our moving average, you will actually get sell criteria for the indicator, which is this orange. You could go into the style and change this risk entry short to red if you'd rather see red for sell, but just for the sake of things, since it's default, I'm gonna keep it this orange color. But what I will do now is I'll actually untick the RSI base moving average, and the Hull, because I don't need that. And then I'm gonna shrink this all the way to the bottom. All I need to see is the colors. I'll know by the oscillator colors that I'm looking for a buy through here, and I'm looking through a sell through here, and then a buy vice versa. And these gray gaps just means that the oscillator it's not looking for a buy nor a sell, so you're not really looking for anything there. And so with that being said, we're going to move on to our second indicator. And now you search moving average, click the first one, then we'll go into the settings. And what I like to do, I'm just going to set this pink, and I'm put the thickness to the second thickness just to make it a little easier to see. And then in inputs, we'll change our length from 9 to 55. And so with this 5-minute strategy, 55 will work for majority of the pairs. Some pairs, like EU for example, work a little bit better with an 89 moving average length, but for majority of the times 55 is good. You'll just have to filter a little bit more, maybe add in some price action, draw some supports, some resistances, draw some trend lines, play the break, but it's up to you. So 55 for majority of the pairs will work. And then last but not least, we'll be adding the new additional indicator, the CM Stochastic multi-time frame indicator. And what I'll do here is if you highlight inside the indicator, I'll actually move the pane up and I'll make this a little bit bigger so it's easier to see. I like keeping the Outback oscillator at the bottom because I don't look at the Outback oscillator until the end when I'm about to enter the trade. This is my final confirmation. I, majority of the time, am looking at the CM Stochastic multi-time frame indicator. So stay with me here. This is going to be a lot to take in, but we're going to go through the style first. And so this stochastic is a normal stochastic. This is not your average like stochastic RSI. It's a little bit different. It gets you less trades, which is, I want more quality over quantity anyway. But if you do like the stochastic RSI, feel free to use that. But what I'll do here, just to make it a little bit easier and just kind of more recognizable, I'm going to make the K blue, and then I'm going to make the D orange, because we're used to seeing that when it's stochastic RSI. I'll actually untick the first and the third background colors of the red and green. We just need the second one for now. So I'll untick the second stoch K and the second stoch D. We don't need that. I'm going to increase the brightness of the upper line and make it one thickness, the thinnest. That way it's easier to visualize. We keep the midline. We don't need the buy strict criteria here. Don't need the plots. And then we're good to go after that. Go into inputs, and in the middle of the screen you'll see use current resolution. We'll untick that, and we want to be on the 1 hour time frame, so it'll look something like this. And we'll untick this for now. And so looking at the CM Stochastic, you'll see it's very blocky. It's because it's on the 1 hour. So we're on the 5-minute time frame chart, but this is projecting the 1 hour. That's why it looks very blocky, because it's making 1 hour moves. So you'll see how there is red and green, basically columns on the chart. And so what this is this setting. Show background highlights when the stochastic cross, aka stochastic cross is whenever the K crosses the D, the blue crosses the orange, is when it's greater or less than the high and low line. It's like a double criteria. So in this case, you get a red column because your K, aka the blue line, is in the overbought territory. The overbought is whenever you're above the 80, the oversold is whenever you're below the 20. And so your K is overbought, and in the overbought territory, it crosses down under the D and you get your yellow barcode here. Vice versa, your K is oversold and it crosses over your D in the oversold territory. It can cross over in the oversold territory, or it can cross over back inside the zone. It's just the fact that, like in this example, your K crosses through your D the next time, it's the next candle in here. While for this example, as you can see here, this basically the same two examples, just slightly different, to where you get your cross inside the oversold, and then here you get your cross right outside back into the zone. And so in this case, what I'll do here is I will actually watch the stochastic the entire time. And this is the biggest point to be made. And please, if you don't listen to anything, please listen to this. We're on the stochastic 1 hour time frame, but we're on a 5-minute chart. This cell that highlights at 1 a.m. my time, the first valid entry is at 2, because it is the 1 hour time frame. So the 1 a.m. candle won't close until 2. So you won't see this red color at 1 until 2 closes, and then you'll see this. Same thing here. So this is 5 a.m. My first entry technically won't be until 6. And then in this case, it is 9 a.m. and I can't look until a trade happens until 10. Using that as an example, what I'll do now is I see that prices cross down. I'll look at my stochastic. I'll see that it's looking to cross. And then 1 hour later at 2, this will technically be my first entry. I'll look down and my Outback oscillator is yellow, and that means sell. but we're pretty far away from our moving average, and I'm not comfortable with taking that. This is the biggest thing. If it's too far and you don't like to take it, don't take the trade. Simple as that. As you can see here, we never actually get into this buy because our Outback indicator stays yellow. And then for here, we get a cross up, but we have to wait until 10 o'clock for this bar color to actually print for us. As you can see here, our Outback is green and we're good to go. We're above. And I actually like this because it has moved up and it's actually pulled back into here. So what I'll do, I'll probably put my stop loss honestly on the moving average. Maybe here, maybe even here. But target however much you want to, whether it's 2, whether it's 1.5. If I look to the left, maybe I target like kind of like this area. As you can see, it ends up hitting this. So now that we've gone over that main idea of the stochastic, we're actually going to go over a second idea of entering trades, because as you can see, these crosses can happen very infrequently, and I'd like to get a little bit more trades. And so what we'll actually do now is we will take the show background highlights. Any stochastic cross happens. It doesn't matter if it's oversold, overbought. Anytime it crosses, we'll be seeing this. And these are the third background colors. So this background color and this background color. We're going to change this to, let's just change this to white, just to make it easier. So now that we'll see blue, it's just any cross. And when we see any cross up, and then white is any cross down. As you can see here, the white and the red happen because we're overbought. The blue happens here because we just get a cross up even if we're in the overbought territory. Then a white happens here. It's just a normal cross down. A blue happens here, it's a normal cross up. So the extra criteria. Now that we know the main reasons we like to see the oversold or overbought crosses, well, actually the cross downs are viable too. And so what I like to see, for an example like this, is if price crosses down in a sell zone, which is between the 80 and the 50, good to go. Just treat that as like a normal sell opportunity. So in this case, 4 a.m. It happens at 4 a.m. So we'll wait until 5, but we have to wait one more extra candle because our Outback isn't yellow yet, signaling sell. And so in this case, we'd actually see an entry here. And we can get in a pretty good trade. And then vice versa, same thing happens here. And I actually have this example, we'll just roll into the examples now, is you get a cross up. And as long as the cross up initiates inside of the buy zone, which in this case is the 20 to 50, then it's good to go. As you can see, it crosses and closes up above, but the cross starts to form within the buy zone, so it's all good. And so in this case, we got a cross up, which is signaling buy. We look at our Outback oscillator, we still have to wait until it turns green. And so in this case, actually, the trade would happen here, and we get a pretty good buy, because our Outback turns green there. So we're good to go. And looking at more opportunities, in this case, we get a red cross, so it's signaling sell, but we have to wait until our Outback oscillator is yellow, which is here. But then we look at the price. Price hasn't broke through the moving average yet. It breaks through. Unfortunately, it's a loss, but we can't win them all. So for another example, we get another red cross here, and then we have to wait until our Outback oscillator is yellow. We have to also wait until price moves under the moving average. As you can see here, it does everything on this exact candle, and then we're good to go at that point. And just for reference, this cross happens at 2200, and just so happens that the candle cross on the moving average happens at 2300, aka an hour after. So once this hour prints, we'll see this red line and we're good to go. We can take this trade, run it down. Same thing happens here. We get our initial cross, but not the close, at 5. So the earliest we can look to take the trade is 6. But as you can see, the Outback oscillator is in green. We're above the moving average, but that's okay, to be honest with you, because it is coming to retest the moving average line as we're waiting for our Outback to turn green, which it does on this 7 a.m. candle. And we take that buy, and that was really good. And so these are just a few examples of buys and sells. I will definitely be making more videos in the future to go over more examples, but let's get into the guinea pig experiment, because I'm pretty sure a lot of y'all were already hooked by this. So I made my dad trade Outback. He traded Outback from August 25th till now, so it's been 11 trading days. He's 15-3 with a 0.27% gain. And so y'all might think, well, like Jay, like he's break even. But he does trading in an unorthodox way, and I really like this. So what he did, instead of forward testing for 1 to 2 months, he forward tested for about 1 to 2 weeks. He found profitability pretty easily with the strategy, which was super cool. And then from there, he actually goes on to his live account to trade this. His live account is like $12,000, but as you can see, his average loss he's risking is 0.025%. He's like losing $3 per trade. He rather risk a lot less, in like a significant amount less, and take live trades to test this than basically, I wouldn't say wasting time on a demo, but he'd rather just start live and just start working his way up for lot sizes. So as you can see here, he made 0.27% off of basically risking 0.025. So if we were to assume he was risking 1%, this percent gain would actually be around 10.8, like 11% gain, which is really, really good. And so I'm really happy for him. And now what we're actually going to do is go over some of the charts that he has done. So he was nice enough to actually chart everything for us, not only show us all of his trades on MetaTrader, but also give us ideas of how he went about it on TradingView. And so just to roll through a few examples to show y'all, this is his mindset of trading. My dad loves his moving averages. So as you can see, the yellow is the 55 that I've discussed, but he added a green one, which is like a 21. He loves breaks and retests and rejections. And so he's added his own twist of this 5-minute manual Outback to his trading style, which we always recommend doing. Like, never, if you're a beginner, stick to the rules, but if you're more intermediate and advanced and you don't feel fully confident in the system, then add things that you enjoy on top of it and make it even better, like my dad's done here. So what my dad will do is he'll wait for the first crossover with the initial move, as you can see here. Then what he'll want to see is the retest and rejection off of either the 21 or the 55 moving average. And then once the rejection happens, then he looks down and looks for his entries. As you can see here, instead of yellow or orange, he made the sell criteria for the Outback oscillator red. And then his K is green and his D is red. But as you can see, if normally the criteria for the stochastic isn't good, but he just views it as a normal stochastic where if the K is below the D, it is a sell opportunity, and then he's good to go. He enters the trade here and he wins. And so in this case, he actually sees that this lower high right here was broken, and so he's cool with taking the initial crossover. The Outback oscillator is green. He doesn't wait a full hour for this little crossover, but that's okay. He knows that the structure was broken and he's cool to scalp that trade. He doesn't stick to a strict take profit, which is okay. He looks left and he just goes off of market structure. As you can see here, he looked left and saw that price was struggling over here. So once he saw that price start to struggle, he's like, okay, I'm cool with taking this trade out. Same thing here. So moving on to another trade. What he's done here is price is bouncing off the moving average. As you could see, you actually got multiple entries here with the normal Outback. But what he wants to do is wait until price moves off of the moving average, comes back to retest, then he gets his rejection candle here and then enters the trade. As you can see, your stochastic is good and your Outback is good, and he wins that trade. Like normal dad fashion, he always changes stuff. And so instead of just a normal 21 moving average, he actually likes the moving average ribbon. I'm pretty sure this is still a 21 length, and it looks like he has 4 lines for that. And so what he's seen here is that price has actually rejected off the 21 moving average ribbon multiple times, and then this one he gets a nice rejection wick and also a move up, and he enters the trade here. I will say one thing is that he does trade off of Owanda, which is a regulated broker, so you can trade this on Owanda. He has done this, and so I know a lot of regulated brokers have terrible spreads, but he is testament to it that you can do it. As you can see here, prices moved away, it's rejected off, and then he's entered off of the rejection off of the ribbon, and everything's red, good to go there. So here, just perfect. Well, if he would actually held on to it, but Papa J loves his scalping. But anywho, he gets his first initial cross here. You kind of get your little gap, so he has his move. He waits for the rejection and the retest then rejection. Enters here. As you can see here, this is a perfect 5-minute manual Outback trade for a sell, because you get your cross down in your sell zone, but you have to wait 1 hour, which is around this 7 a.m. point, because this happens at 6. So as you can see, you would wait until this candle, because your Outback oscillator turns red right here, which is actually what he had entered on. He puts his stop loss at the swing high, and you could have ridden that bad boy all the way down. And what I also like from him too is that he noticed that prices kept trending down. It's come back up to actually retest the 55. He waits until price rejects off of the 55 and rejects through both of his moving averages and his ribbon, and he enters again, as you can see here, and gets another really good sell. And so does another scalp here off of this rejection. Cool. He gets the first initial move. It starts to wick around his ribbons, and then he enters sells, and he scales out with partial profits 3 times. Price moves away from the ribbon, which is really good. Comes back for a second, and then you have a bullish engulfing from this slight rejection, and he enters in there. So it's not always the same criteria, which is okay, but it's the general idea of using the fundamentals of Outback. And as you can see here, he's even added trend lines. The fact that his initial cross is here, which would be around like 3:30, he'd have to wait until like 4 to even trade this. As you can see, price has already moved far away, and so he's just waiting. He's waiting for it to come back to his moving average ribbon. And he sees these wicks form, and he literally just draws a line, a descending line, just to form these 3 wicks. As you can see, he waits until the break of it, which is here, gets into the trade. Bada bing, bada boom, some wins. And initial cross here, price moves down, comes back, rejects, then you're good to go, enter there. First initial move happens here, rejects. Of course, he's added more moving averages, what's new? And then he enters off of that rejection. So all in all, he's taken the original rules that I just went over for y'all, and he's added his own twist to it. He loves his moving averages, so he'll play off of the retest and rejection off of moving averages. He won't always take the initial cross unless it's breaking market structure like it did in one of the previous examples. And then he looks left, like as you could see here. You could see this huge wick on the 5-minute. He's okay to close out this trade right here because he sees that price might struggle here, and you could see he's going 15-3, like he's doing something right. It's important to know that when you're starting off with a new strategy, the rules are important to follow. Yes, but as you grow with the strategy, as you notice certain things each day trading it, feel free to like test it out. There's nothing wrong with that. It'll feel more comfortable to you as a trader because you're trading something that you enjoy seeing. And just all in all, like it'll help your profitability at the end of the day. I'm very happy for my dad. The last 2 weeks, he's basically made 11% if he were to risk 1%, and he's slowly increasing his lot sizes more and more. But at the end of the day, Outback has treated him well, and I know it'll treat y'all well. So appreciate y'all sticking around for this video. If you were interested in trading Outback and also connecting with like-minded traders, please feel free to drop down below and click the Trading Floor website link and sign up for the Trading Floor. And there is an Outback specific strategy channel that you can actually participate in and talk with people every single day now. It's open to the public now that Strategy Wars is done, and it's super cool. So everybody trading Outback, everybody learning Outback, everybody that's experienced and really good at trading Outback are all there to help you out. So it's pretty cool, and it's just a really good community to be a part of, and hopefully I'll see you there. So with that being said, hope you enjoyed this video. Feel free to like, subscribe, and comment. Let us know what you like about this. Peace.